the crypto swarm makes the mistake of not understanding monetary economics. For the entirety of its existence, cryptocurrency has been a relatively peculiar asset class, but it will not remain such indefinitely. I argued only last week that cryptocurrency is here to stay. Now I'd like to explain to some of my crypto buddies why mainstream economics and finance do not take them more seriously. To put it frankly, many of you have a poor understanding of monetary economics. There are two common errors. First, the dollar is not about to collapse, and it will not be replaced with a digital asset. The United States is the world's second largest economy and the core of the English-speaking world. It possesses the authority to levy taxes, the most extensive network of alliances, and the most formidable military. Yes, it has issued a large number of dollars since 2008, but it has also taken steps to slow the rate at which those dollars circulate. Price inflation is going to be greater for the next 2 years or more. Although some of the immediate inflationary pressures are already easing, lumber prices, for example, are currently falling. Over a 10-year horizon, the US government can borrow at near zero real interest rates, hardly a sign of a doomed empire. Neither is the US government poised to become bankrupt or on the verge of hyperinflation. The US debt to GDP ratio may reach 200%, while Japan, a poorer and smaller country, is doing fine with similar debt levels. Keep in mind that, while it is difficult to determine, national wealth may be 6 to 8 times more than GDP. So a debt-to-income ratio of 200% could imply a debt-to-wealth ratio as low as 25%. That is far from the end of the planet. Consider how happy you'd be if you paid off just 75% of your mortgage. In fact, cryptocurrency is more likely to harm the currencies of nations that are struggling, such as Venezuela. Because fiat currency isn't going away, crypto could actually improve the value of the dollar in the long run by restricting the emergence of potential competitors. A second aspect that is sometimes overlooked in the crypto industry is that crypto prices will not continue to rise at such a rapid pace indefinitely. It makes no difference whether a crypto system incorporates money supply deflation or whether new and useful applications are discovered each year. The market will eventually figure out the value of cryptocurrency and incorporate that information into a high level of pricing for those assets. Expected rates of return will thus be, dare I say, typical. Compare the cryptocurrency market to the art market, which for a long time overlooked the potential worth of an Andy Warhol painting. Prices rose dramatically for many years. However, a liquid market exists at this time, and the projected value of a Warhol investment is not necessarily better or worse than the value of an investment in other well-known works of art. It is a completely legitimate, if controversial, viewpoint that the market has yet to recognize the full worth of cryptocurrency. This state of affairs may exist for a little longer, but it will not last for decades. The irony is that so many of the arguments advanced by crypto enthusiasts indicate extremely poor monetary rates of return on crypto. People will be more willing to hold crypto at lower pecuniary rates of return, just as they are willing to hold cash, or just as the collateral uses for US Treasury bonds enhance their price and lower their projected rates of return. If we eventually arrive to a world in which equities are predicted to climb by 5% to 7% per year while Bitcoin rises by 1%, that will be a sign that crypto has arrived. The broader argument is that, while cryptocurrency has been a highly unusual asset class throughout its history, it will not continue to be an unusual asset class indefinitely. I can see why crypto supporters could be put off by reprimands from mainstream monetary experts. Few economists have contributed anything to the advancement or development of crypto concepts, and they have occasionally mocked them. Satoshi Nakamoto and Vitalik Buterin are not simply outstanding innovators, but also two of our time's most prominent monetary economists. And, whatever the long-term worth of cryptocurrency is, markets have consistently been wrong. All of this is to say that normalization of crypto theory as well as value is on the way. It will be less entertaining than the current extreme and topsy-turvy crypto status quo. Nonetheless, it is cause for celebration. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.